My name is Tim Deeve. Today we have the Wednesday trading session. We continue to monitor the key fundamental events that influence the dynamics of financial assets. On today's economic calendar, the monthly OPEC report, US crude oil inventory data, and a speech by Mary Daly, a representative of the US regulator. I suggest paying attention to the dollar index, which is trading at 100.80. Market participants are analyzing the latest US inflation data, according to which last month the consumer price index decreased from 2.4 to 2.3%. It is precisely this weakening of inflation that gives the US regulator the opportunity to continue easing national monetary policy. In this regard, I suggest waiting for the speech by Fed Chair Jerome Powell, which will take place this Thursday. If Powell confirms that the slowdown in inflation is a surprise for the US regulator, and therefore the Fed may discuss easing economic policy at one of the upcoming meetings, the sell-off of the dollar will continue. Therefore, the American currency, the dollar index, will most likely end the current week in negative territory. As for the oil market, current prices are $66 to $70 per barrel. Despite the prevailing optimism in the market related to breakthroughs and progress in negotiations between the US and China, it is important to understand that the overall fundamental picture is developing negatively for the oil market. In particular, supply is increasing. OPEC Plus countries have already agreed on a significant increase in oil production, including in June. At the same time, demand indicators are declining. Economic conditions in China are deteriorating. The latest inflation report in China showed that the consumer price index decreased by 0.1% year on year. All of this is a negative consequence of the trade confrontation with the US. I believe that the situation will only get worse going forward, so an oversupply may well develop in the market, which will continue to put pressure on black gold prices,